Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar weakens for a second straight session, retreating from near 3-year highs, as we can see posted a couple of days ago, as escalating Middle East tensions drive safe haven demand for the US dollar, pushing it back above 100. This week, expectations that the Reserve Bank of Australia could raise the official cash rate to 4.1% from 3.85% at this meeting on Tuesday. Also, attention will turn to the labour data, with unemployment forecast around 4.15% and employment change expected near 20,000. Ahead, also, we got the Federal Reserve's policy decision, which is widely expected to see rates on hold at 3.75%. So turning to the technicals, you can see that we've got a very heavy candle in play here, and we could see it move back to the bottom side of its range, somewhere close towards that 69 region. Technicals are heavy, so I do support this case. Let's see if demand will return from the lows of 69 and get a correction. It has been in this tight range for some time, so we may see history repeat itself again. With a full week of data and high volatility, investors now look ahead to policy decisions from the Federal Reserve and the European Central Bank, both widely expected to keep rates unchanged while monitoring how the Middle East conflict may reshape inflation outlook as the oil rebounds. So looking at the technicals here, we have crushed the level of 114.45 and the next target now, which is a key level at 113.55.80. A break there, well, I'm again very concerned that the fact is we could see a further drop towards 112, so do keep an eye on this level at 113.55. Dollar yen, well, it's back above 159 and no sign of intervention. Also this week, the Bank of Japan's policy decision as well, with the Fed and the RBA, and it's likely to see rates unchanged at 0.75%. At the prior meeting, though, just one policymaker backed a rate hike, and a broader split could signal the bank is moving closer to a tightening. Let's see how we play here. The market is well overextended above this 159. Bear markets do come fast and furious, as you can see back here in January. 3 days it took to wipe out all these gains, so do be aware that if we get a bull trap above 159, then I expect to see a similar pattern forming following the break. Sterling also crushes the level around 132.40-60 area and still looks somewhat weak, even though oversold. We could see a move to 139.90 to 131.45 due to the technicals in a bearish bias. Wrapping up with commodities, well, the gold also posted its second week of losses and now looking towards the support area, anywhere down towards 4,945.55 and reassess from there. Let's see if we can get a bounce. I feel the market doesn't like to be too oversold, and as we get in a little bit closer towards this trend line, we could see another correction. And oil, well, the market did rebound from these two candles. That was a dragonfly doji and a hammer, and we've got another hammer in play. This could actually see a further push to the upside. I'm getting a little bit cautious considering how this drive here of this one-day candle was very whipsawed. I still feel that I'd rather keep out of this market at the moment because it is way too volatile and losses can be taken very quickly. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new week.